So the losses from the realization of business and business assets and liabilities. So the assets and liabilities are, number one, capital assets of a business to extent to which the assets were used in production of income from business. So we have to include those assets which are used in production of income. In case of liability, that is a debt obligation incurred by borrowing money. So we are getting a loan from money. The money was used, or an asset purchased with the money was used in the production of income from the business, right? So the money, or if you have obtained any loan from somewhere else, that money should be used to produce income for the business, or that money should utilize to purchase an asset. That asset should be effectively connected with the business of making profit. In case of any other liability, the liability was incurred in the production of income from the business. And now we move to section 2.5.4.9, business or investment losses. So when an individual or an entity, a person, earn income, to that income they should pay tax. The generate income, the earning entity should pay income tax, right? If they face losses, so what is the treatment for us for that? So if we earn income, profit, we have to pay tax. So in case of losses to that business, yes, we can deduct the tax payable to the government, right? So we can deduct that losses from our profit. So there are many different sources of income. So business income is one of the sources of that income. So if you face loss on that business, then you can deduct that loss as expenses, right? You can deduct that losses as expenses, right? So you can credit tax. So section 19 provides the deduction of loss in calculating the person's income from business or investment. So it may be a business loss or maybe investment loss. Two types of losses may be incurred in the context of business investment. There are two types of losses. First one, number one, an unrelieved loss of the person for the year from business can be deducted from other business of that person. Say one person can have more than one businesses. So one business is a retail shop, so another business is manufacturing of any items, and they can, another business is providing services. So out of these three businesses, he may encounter with loss from one business. So if that person is facing loss, that loss can be offsetted with other businesses which are making profit. Unrelieved loss of the person, of an entity, of any an unrelieved loss of the person for any of the previous 6 years of assessment from the business or any other businesses, right? uh, right, I will explain through an Excel sheet. Can you see the Excel sheet? Can you see Excel sheet? Please comment. Is it visible to you? Okay, right. Let's say income from business income. Business income, say 200, so 20 million, 2 million. And employment income say right. Then how much assessable income? Assessable income, how much? Total sum. Say assume that a tax at 25%. Assume, right? Tax at 25%. What? How much tax to pay? 3 million into 25. So tax is tax payable is 750,000. Assume that now he is facing loss. Assume that he is facing loss around how much? Say 200,000 loss. Then how much tax payable? Tax payable, are there any amount to pay tax? So minus value, total 1 million loss. So 25,000 the person should receive from where? The government. If they earn income, they should pay tax 750,000. So if they earn loss, so total income, assessable income. So 1 million is a loss, total loss, right? So employment income 1 million, business loss is 2 million, and how much here? 1 million loss. So for that 25%, 250,000 should get from the government. From the government. Is it possible? Is it right? My calculation is right. Is it possible? Where the government will give you money? No. So what is the treatment? What's the treatment? So we can here make it 0. How we can make it 0? How? He can deduct out of this 2 million loss, he can reduce his loss up to 1 million. Then what will happen? What will happen? It is become 0. It is become 0 and tax no. Then what will happen for balance 1 million loss? 1 million loss. Say next year his income is 250,000 like this. Next year he can carry forward the previous loss 1 million here. Then sum. So then he pay tax like this. And then he may pay tax like this. Right? So likewise here earlier it was 2 million, no? 2 million. But the government restrict the deduction of loss up to 1 million. So what's the treatment for the balance 1 million? So that will be carried forward to the next year, right? Next year. So it can be carried forward up to another 6 years. Up to another 6 years according to the provisions. They can carry it forward next year. Any questions? Any questions? Okay. Right. As per the section 19.6, loss of a person for a period of assessment from a business or investment shall be calculated as the excess of amount deducted in accordance with the Inland Revenue Act in calculating the person's income from the business or the investment over amount included in calculating that income. And here, what do you mean by the unrelieved loss? Unrelieved loss means we are not yet taken the relief from the government. So the logic is, so once a citizen enjoy a profit, he should pay tax. Likewise, if citizen facing losses, government should give them a relief. So, but the thing is, government will not give the relief in terms of money. Anyhow, for that loss, government can give some sort of excuses, reliefs to the next year, right? When he pay tax for the next year, the government will give them as a relief, so he can deduct the previous year losses, right? So that and that relief, unutilized reliefs called unrelieved losses. So they are not yet claimed. Unrelieved loss means the amount of loss that has not been deducted in calculating the person's income. So in the early example, the actual loss was 2 million, but at that year we able to deduct only 1 million, first 1 million. So next 1 million, it can be carried forward to the next year. So that 1 million can be deductible from next year's profit. So therefore he can reduce the tax payable to the government. Accordingly, only the loss calculated under the Act number 24 of 2017 can be deducted under section 19. As per the transitional provision published by the Gazette notification dated on 1st of April 2018. So there are some conditions. So the transitional provision mean, so the act, earlier act was number 10 of 2006. In 2018 onwards, the new act comes. So the provisions of the previous act is different from current act. So therefore the people, the taxpayer expect some sort of mismatches between the old law and the new law. So to solve that kind of issues, mismatches, this kind of provisions has announced time to time. It's called transition provisions, whereby provision of Inland Revenue Act number 10 of 2006 provides for the deduction of any loss in ascertaining the assessable income of any person for any year of assessment, and any balance of such loss as at 31st March 2018 shall deemed to be the loss incurred for the year of assessment commencing on or after 1st April 1st, 2018 under the Inland Revenue Act number 24 of 2017, and be deductible in accordance with the Inland Revenue Act number 24 of 2017. Right? It's not much detail. You don't want much detailed explanation, right? So what you understand was you should understand if there are any losses that can be deductible. So that the understanding of that, it is enough. And unrelieved loss which is eligible to deduct for a year of assessment cannot be deferred to another year of assessment, right? And reduced rate loss can be deducted only from the same reduced rate or lower reduced rate or the exempt profit. So if a business person earning profit from exempt source, so if the person facing loss on that exempt business, he unable to deduct his losses from his profit. Same. So for example, that a business person, Mr. X, we assume that Mr. X is the business person. He is generated profit 1 million. That 1 million profit is not taxable because of exempt profit. That is an exempt profit. So whatever the amount he earned as a profit, no need to pay tax because of exemption. Anyhow, that person has faced a loss on that business, exempt business. So that time he unable to claim loss from the business, from the government, right? So if he earn profit, he is not liable to pay tax. Therefore, even though when they are getting loss, he no need to pay. He can't deduct his loss from the tax calculation. The above deduction rule apply on treatment of investment losses other than the losses from disposal of investment assets. So an unrelieved loss from a business may be deducted in calculating the income from an investment asset. And an unrelieved loss from investment can be deducted only in calculating the income from investment. Gain from realization of investment assets shall not be deducted by any loss of the disposal of any other investment assets. So that's the thing, right? So we have already discussed how to calculate business income. So this is the summary. So income from a business, so it's a net profit, right? And we have to deduct exempt amount if there are any income from exempt income included in the profit, we have to deduct that amount. Final withholding payment, we have to exclude that amount, and amount included in employment income. So it means these are not part of business income. Therefore, we have to remove that part here. And liable income from business and less allowable deductions. So we have categorized according to the act. There are three types of deduction: main deduction, general deduction, special deduction. Finally, you will get assessable income from business. So that is about business income. So up to this point, we have discussed so far income from employment and income from business. Now we will start the third source of income, that is investment income. Investment income. As per the section number 7, person's income from investment for the year of assessment shall be the person's gain and profit from that investment for the year. Say, so employment income means, so when a person works somewhere else, he is getting some amount of money, right? So that is we categorized under employment income. So the second source of income is business. So a person is getting risk, and he has make some sort of investment, and they're doing business, buy and sell, or they are providing any professional services. Due to that, he is getting income. So that kind of income is categorized and fall under the business income. The third one is investment. Say some people buy a house, additional house in Colombo, and they are rented out to third party and getting rent income. So this is kind of income is categorized as investment income. And some people put money in fixed deposit in the bank, and every month or every year they are getting interest as income. Some people put their money in the share market by investing in shares. Through that, they are getting dividend income, right? So investment means, according to the section 195 of the Inland Revenue Act, it defines as the owning of one or more assets, including one or more assets of similar nature or that are used in integrated fashion, and include a past, present, and prospective investment, but exclude business or employment income. So right, and the second, a game of chance, including lotteries, betting, or gambling, also included as a investment income. So Mahajana Sambata, Vasana Sambata, so that kind of lotteries also is coming under investment income. In calculating person's gain and profit from an investment, following amounts shall be included, right? So now we will discuss what are the components of investment income. The first one is a dividend. Dividend means when you purchase shares from any company, so time to time the company divide their profit to the shareholders. That is called dividend. Interest, if you put money into the bank or fixed deposit or saving account, so bank will be give you an amount, that's interest. Sometimes interest you can get by providing loan to other persons. Discount, charges, annuities, natural resource payment, rent, premium, and royalties. So we will discuss in detail in later. Gain from the realization of investment assets as calculated under the chapter 4. Realization of investment assets. Say you purchase a land, you keep that land for a period of time, then you resell that land and make profit. So that kind of transaction will treated as business investment income. Amount derived as consideration for accepting a restriction on the capacity to conduct the business, conduct the investment. Gift received by the person in respect of the investment, winning from lotteries, betting or gambling, other amount required to be included under this act. Right. In calculating person's gain and profit from investment, following shall be excluded. So these are the following are not included into the investment income. Number one, exempt amount and final withholding payment. Exempt amount, right? Exempt. So exempt amount, we no need to include that amounts when calculating income tax. Withholding payment mean, say, right? Assume that I will explain that withholding payment in Excel sheet. Right here, you have deposited 50 million 5 million, right? 5 million in the bank. The bank will be pay interest at 10%, right? 10%. How much you will receive as investment interest? How much you will receive interest for the year? How much? You put money into the bank, 5 million. The bank charges, bank pays 10% interest. How much you will receive as interest income for that year? 500,000. Right? 500,000. Right? So bank will pay exactly 5 million to you, or they have deduct some amount. Do they deduct some sort of amount, or the same amount, full amount they will give you? How much? If the bank give the full interest, or they will deduct some sort of amounts? Deduct withholding tax. Say for example, assume that withholding tax is 10%. At the time of pay interest, they will deduct how much? Equal, they deduct 10%. Then you will receive how much? You will receive finally how much? 450,000. 450,000, right? So it means this 50,000, where it goes, where? Whether bank keep this money, this 50,000, or they will send to the Inland Revenue Department, tax collect, to the government. So it means you already paid tax or not for that income. For this income, have you paid income tax or not? Paid. You already paid. Then do you need to include this amount for the calculation of income tax? Again, do we have to pay income tax? No. On behalf of us, already bank has deducted and remit to the government, to the Department of Inland Revenue. So no need to pay tax. So this 50,000 is called withholding tax, right? Withholding tax. If any income already paid withholding tax, that is not included in the calculation of tax, right? Already we have paid income tax, right? Clear? Right. Right. Exempt amount and finally withholding payment, and amount that are included in calculating person's income from employment or business. So if we included any income from under employment income or business income heading, so no need to, we can't include again that income in calculation of investment income. Right. We will see in detail the elements of investment income. Right. Sorry for the interruption. There's a power cut here. Can you can you can you listen? Can you see the display? Right. Can you see the display screen? No response. Okay. So okay, we will discuss in detail the elements of investment income. Right. Dividend. So dividend means a payment derived by a member from a company, whether received as a division of profit in course of liquidation or reconstruction, in a reduction of capital or share buyback or otherwise. So dividend includes a capitalization of profit, whether by way of bonus share issue, increase the amount of paid up on shares or otherwise, and whether an amount is distributed or not. But dividend exclude must by a payment made by the member to the company, debit to a capital, share premium or similar account, otherwise constitute a final withholding payment or is included in calculating the income. So you don't worry about this kind of technical terms, right? So it is mentioned what is mentioned in the act. So exempt amount. So third schedule explain what's the exempt amount. It is important, right? It is important. A dividend paid by a resident company to a member to the extent that dividend payment is attributable to or derived from another dividend received by the resident company or another resident company that was subject to withholding tax. Say you discuss about in accounting, advanced financial accounting, you may discuss about subsidiaries, holding company and subsidiary company. When subsidiary company announces dividend, so that dividend will be goes to the holding company. Again, the member of holding company will get that amount as a dividend. And the final withholding payment, dividend paid by a resident company to the resident person. So that also we not include that calculating in tax. If already tax paid, then no need to worry about, no need to include that income to the calculation of income tax. Interest. Interest includes a payment including a discount or premium made under a debt obligation that is not a repayment of capital, a swap or other payment functionally equivalent to interest, a commitment, guarantee or service fee paid in respect of debt obligation or swap agreement and distribution by a building society. It's the it is the definition provided by right. Exempt amount. That's it all. The interest derived by the charitable institutions where it is proved to the satisfaction of Commissioner General, such interest is applied solely for the purpose of providing care to the children, the elderly, or the disabled in a home maintained by such charitable institution. An amount equal to the interest or the discount paid or allowed to any non-resident person to any licensed commercial banks in Sri Lanka by the issuer of any AGN bond denominated in foreign currency issued on or after 21st of October 2008 by on behalf of the government of Sri Lanka. Right. So there are some exemptions. Say we can find there are some institutions they are providing institutional care. Institutional care. We call it as charitable institution. So orphanage, say orphanage. Orphan mean the people does not have father or mother, right? There are some institution they are keeping that kind of children. They want a source of income to maintain that people, that children. So what they do is they invest a big amount of money into the bank, and they are getting interest as income. So government instruct to the government is not charge tax on that interest income, right? If charitable institution getting interest income, for that interest government will not charges any tax to that. And the second one, any persons from outside Sri Lanka, right, they send money to they send money. So not that case. So this case is right. Government issued bonds, right? For if government need money, they issue bond. For the bond, they pay interest. So if a non-resident person purchase that bond, the interest on that bond is not taxable, right? They are giving some kind of relief. The same thing, the final withholding payment. Interest paid or treated as being derived by a resident individual other than amount of interest paid to the senior citizens falling within the relief threshold 15 million, 1.5 million in paragraph 2D of the fifth schedule to this act and charitable institution, right? Uh, Senior citizens, you know, senior citizen, senior citizen. So the age is 59 or 60, right? If the person whose age is more than 55 or 60, they can put their money into the bank and they can get interest. So the bank will not deduct any withholding tax up to the interest income is 1.5 million. Income is 1.5 million. So up to 1.5 million of senior citizen account not taxable. And charitable institution, as I told you earlier, so there are some institutes they are maintaining orphanages, right? Orphanages and elder people, right? Sick people, they are maintaining sick people. So for that institutions interest income also government not pay tax. And relief, right? Relief on interest. In case of individual who is a senior citizen in a year with interest income derived from a financial institution, 1.5 million for each year of assessment up to the total of the individual's interest income for the year. So it's simply there's no tax up to 1.5 million. So discount I explained in the last class, not last class, in the classroom lecture hall about what is discount. The gain derived from the casual discounting of bill of exchange So check, they are discounting checks, right? So 1 million check, you submit 1 million check and you will receive 9 lakhs or 8 lakhs, 8.5 lakhs, like that. So gain arising from the discounting of bill of exchange, checks, etc., the normal course of business considered as business income. So, and charges. A charge is a sum received by the person under the deed or an order of the court which is secured on the income or property of the payer. Premium. Premium are payments received as a consideration for obtaining the right to use a property rather than the actual use of the property. Example, receipt of key money on letting premises. Annuity. An annuity is a fixed sum receivable annually which is not a capital nature. Payment of an annuity which should be made with reference to a year may be a periodic installment. So example, receipt of monthly payment after contributing a pension fund. Annuity. And exempt amount. Any amount derived by the senior citizen from annuity for a life for a period of not less than 10-year purchase from the bank or an insurance company registered under the regulation of insurance industry, Act number 43 2000. Right. Natural resource payment, right? So you have a land. In your land you can in your land consist of minerals in your land. So you give that minerals, you give that uh, permission to third party to take out the mineral from the earth for that time. uh, that time you can get some sort of income. So that is called natural resource payment. Natural resource means mineral, petroleum, water, or any other non-living or living resource that may be taken from land or sea. Natural resource payment means including a premium or like amount for the right to take natural resource from land or the sea, or calculated in whole or part by reference to the quantity or value of natural resource taken from the sea. And I think it's enough today. The rent is an important section. We will discuss it